Gold's future continues to look good. JP Morgan's upcoming report predicts 2025 will build on an already stellar 2024. With the global economy in a flux, analysts are calling gold a critically important asset. If 2024 impressed you, be prepared for it to continue. Before we begin, remember to like this video and subscribe for more economic updates. A central message of JP Morgan's 2025 preview report suggests that 2025 will be a growth year with potentially a lot of money to be made by investors. However, they say this comes with risk, and protecting the downside is equally as important. And the asset of choice to protect that downside, they say, is gold. The analyst wrote, gold rallied to new all-time highs in 2024, and we see a strong case for a continued gold rush in 2025. The commodity can play an important role in building resilient portfolios. Analyst Grace Peters is bullish on global growth and gold. Let's take a look at what she had to say. In a Bloomberg TV interview discussing JP Morgan's 2025 preview, Peters explained, "We've had 2 years of strong risk asset gains, and therefore the underlying theme that we want to promote is the idea of strengthening portfolio resilience, aligning to a base case, but also managing for those tail risks." She added that these tail risks could include higher inflation, but also the idea that growth may weaken and will weaken at some point cyclically as we go through the business cycle. Peters emphasized risk factors that make it very important for investors to make sure that they cushion any potential impact. Peters reiterated her optimism about global growth, but emphasized mitigating risks. "We think there's a really solid outlook for growth over the next 12 months, but also over the medium term. But inflation risks are there. Geopolitical risks are there. Risks around the deficit are definitely there. And therefore adding infrastructure and gold as 2 of our preferred ways to strengthen portfolio resilience we think is critically important." Recently, gold has stumbled following the U.S. presidential election. Analysts attribute this pullback to increased dollar strength, which many believe may characterize a Trump administration expected to promote an America First economic agenda. However, Morgan analysts appear to dismiss concerns that U.S. policy will compromise gold. They believe that macro drivers expected to support gold will continue to do so despite any policy changes by President Trump. They project continued high levels of central bank gold demand, writing, "We expect that gold prices will find continued support from central banks, specifically in emerging markets which have been buying 1,500 tons more gold per year than their pace before Russia invaded Ukraine." The analyst team also says its own research has revealed gold's effectiveness at reducing the negative portfolio impacts of heightened geopolitical risk. In a study of roughly 50 geopolitical events since World War II, we found that gold was a reliable near-term hedge against equity market volatility. What's one thing we all worry about? The U.S. dollar maintaining value, especially in retirement. JP Morgan analysts predict that gold could gain even more momentum next year as investors want to hedge against currency risks. They also expect gold to gain support from declining interest rates and uncertainty around sovereign debt and deficits. In their comprehensive 2025 preview, Grace Peters and her team emphasized that investors may want to prepare next year to protect wealth and defend against increasing macroeconomic instability. One way they suggest accomplishing this is by diversifying with gold, which they term the original safe haven asset. Risk-reward analysis is what investing is all about. How much risk are you willing to take on in order to get reward? For retirement savers, 2025 could be a very bullish year. However, you must also protect the downside and limit your risk, and that's where gold comes into the picture.